Hey, welcome everybody to the 40 Finance channel as I organize my cords here. It's been a big 24 hours here in the market. Yesterday, we got a nice little lift for a second anyhow, as there was some rumors that perhaps, the war was going to settle down into diplomacy. That, of course, did not happen. So we're back down today. But then after hours, we also got some huge news from Amazon on their stock split, which we'll get into, in addition to a buyback, which to me is also important in these times of uncertainty. When you have companies that are executing buybacks at a big level, there's pros and cons to it, right? But I think in Amazon's case, it was probably worth a shot at the level that they're going to do it at. So a lot of stuff to look at, and hopefully your investments are doing well and you're staying safe. So thanks for joining today. Lion's already here, and he's got Jimmy Carter over Joe Biden. I'll take it. The one thing that Biden didn't do, thankfully, was the cryptocurrency executive order. Frankly, I have trouble understanding even what happens after that, but at least it looks like from a crypto standpoint that they're open for discussion, and it's not some sort of like ban hammer on the crypto world like maybe you saw in China. So I'll take it. Again, I'm not the expert, but I read the headlines and the articles, and it looks like it's, we just want to make sure that there's regulation involved, which I'm perfectly fine with. I don't use it to, for illegal purposes. And anything though where they were going to do bans or limit or whatever obviously would hurt the prices, but it's good to see that's not the case. H. Montero, good to see you. All right, let's hop in. If you're living under a rock, you might have missed the Amazon news, but I assume most people here saw it. But let's just look at a couple things here on this. So we'll skip through the obvious stuff. I'm just going to assume you all know this. 20-for-1 stock split, right? So if we are at, where are we here? 29. I'll have to get out my calculator. 2,900 divided by 20 is $145 a share as of today. I think the bigger thing with these stock splits is obviously nobody makes extra money or gets rich or whatnot. It's just the options game. The options game for Google and Amazon is potentially big, right? Because they're both right now, certainly Google, some would argue Amazon, but I would say that they're fundamentally fair valued at the bare minimum, and Google is fundamentally undervalued. So with that in mind, depending on where their price sits heading into summer, I think the proliferation of options trading on both Google and Amazon could be a needle mover, right? So instead of people, in a volatile market, people who would use options trading to get a slice of Google or Amazon and potentially control 100 shares, it's about to get way more affordable, okay? Way more affordable, and that's where I think this stuff wins. You probably also have read some comments in there about the potential for Google now and Amazon, because their price is coming down. They could jump into the Dow. That's big, I guess. Theoretically, it would add to some ETFs, but bottom line is almost every ETF that matters has a heavy proliferation of Amazon and Google. Now, the Dow component is great. It's not going to hurt anything, and it'll probably, add a percentage point or something to it down the road. But ultimately, I think the options game, in my opinion, is a much bigger boost for these companies. And it turns people who potentially had, let's just say, 5 shares. Now, all of a sudden, they're going to have 100, and they'll have the opportunity to sell covered calls, right? So that'll up the game a little bit and give folks another incentive to get in that if they are interested. So that's my, my take on the Amazon stock split. Is it is good news. I think that in this current market with retail trading, it will open up new markets for them, or new investors. But the options game is the more likely scenario for it to perform well. All right, I was trying to look up, set for May 25th on the shareholder approval. Ironically, and I'm doing this off the top of my head, that is significantly faster than Google, who I think their shareholder approval is not until July. So even though Google announced theirs in advance of Amazon, it's funny that Amazon would technically reach that point prior to Google if they do hit it on May 25. Now, on the buyback standpoint, $10 billion worth of stock. It will buy back shares opportunistically from time to time, and there's no fixed expiration. So I think that this is what this means to me is they may never spend this money, but it's just an optionality there if they do decide to. I think most people would prefer to see companies like Google and Amazon make acquisitions, but we know that acquisitions in the eyes of the Fed and the Department of Justice in particular with these companies has been difficult. Okay, everything that they try to buy is going to go under a microscope, and it's just going to, they can't go out, for example, and buy, let's just say, PayPal for fun, which that would be a monster, and I don't think that would be very difficult to pull off financially. But on the same token, the Department of Justice would get all in their face about that one. So Google and Amazon will struggle to make broad acquisitions that maybe you would dream about at your kitchen table or something like that, just because the regulation aspect. And we saw a little bit what happened with, who was it, NVIDIA, right? Now that they were going after an international acquisition, not with ARM, or maybe it was ARM. I can't remember which of the two it was between AMD and NVIDIA. But long story short, they're going after an international acquisition, which not only had to face scrutiny in the United States, but then it had to get approval from all over the place. And you see how difficult it can be. AMD was successful to pull it off, but NVIDIA finally threw up the flag and said it's not even worth our time anymore because it's so hard. So keep that in mind if you want to poo-poo buybacks for Google and Amazon, Apple, Microsoft, whatever. I understand it may or may not be the best play for shareholder value, but I will say that these companies, they don't have a blank slate to make acquisitions like people hope they would. It doesn't make sense to waste your time on stuff that's always going to be shut down by regulation, right? All right, Kevin Hawthorne, good to see you. Lion, usually when a company issues a split, they suffer for the short term, but Amazon is considering a $10 billion buyback, which is a good call. And then Lion, you feeling those gas prices yet? Yeah, so for the first time here in Cincinnati, Ohio, which is, it's Midwest, okay? So Midwest of America, we sort of have middle of the road everything, significantly cheaper than the coast, right? So you could move to Ohio, and depending on how far out you want to live, like you could get a really, really nice house for $200,000, $250,000, right? A typical like suburban home. And so when gas prices for the first time this week went over $4, it's news here in Ojai. And it's not a killer for me, but I don't do deliveries. And I can't imagine, I was thinking about the Uber drivers and stuff who make nickels and dimes to start with. That's got to be a struggle. And I oftentimes, when I go to pick up food for my family or just grab something to eat, I'm always thinking about those guys and girls who are busting their butt. And I know they don't hardly make anything, like $2 or $3 for a food delivery, a couple bucks here and there for an Uber ride, and you start taking another $1 per gallon out, it's got to add up over time. On the bright side for transportation type companies and independent entrepreneurs, in the tax code of the United States, there is a per mile deduction, per diem. I don't know what you want to call it. But for every mile you drive with the car that you own, you get a tax credit per mile. And it's usually, let's just look it up together. That goes up. My whole point is that it will go up because of the gas prices. So 2021 vehicle deduction. Okay, so I want to get to the IRS. This is different. This is a car that you're putting into service. Mileage. Let's try that. Okay, here we go. This is the kind of stuff that comes out. It won't come out until December, or at least that's what it did here in 2020. So standard mileage rates, 56 cents per mile driven for businesses, which was actually down from the rate for 2020. Now, my whole point of making you sit through my Google searches here is that if gas prices go up, this 56 cents per mile deduction will go up as well. Does it go up at the same pace? I have no idea. But the folks that are legit doing Uber and, sending in their taxes and considering themselves a small business, they will get some benefit to it. But, they don't care about that today, and I wouldn't either because it's so far away. All right, Glencore. Don't know Glencore. Let's see. Unless it's something I'm missing. Glencore PLC. Reviewing activities, Roosevelt's. Let me just skip down here. Produces metals, minerals, and energy in America. Okay. Company produces and markets copper, cobalt, nickel, zinc. So my take right now on, it also has oil exploration. Okay. So, there could definitely be something here. I'm not going to be able to be the one who tells you, unfortunately, because I just don't know enough about this market. I'm under the opinion that gas will settle down in America. Oil prices, Texas crude oil will settle down in America. It probably isn't going to happen tomorrow, and it may take a couple months yet. The fact of the matter is that Russian oil is such a small part of what we do in America that I'm not super concerned about it. That doesn't mean that these guys won't make money, and it could very well be worth a shot. If I was in any oil company, period, I would have my finger on the sell button soon. I would be right there because you're a headline away. Look at what we saw yesterday, guys. And let's take a look at this stock that I don't know very well. 5-day. They don't have a lot of data on this one. Let's go to Exxon. There it was. All right, Exxon 5-day chart. Yesterday was May 9th. Okay, we finished. Exxon was at 91.39. Yesterday, oil prices went down, right? Some, freak thing. went down about 12%. Look what happened to Exxon. You lost out. The whole market was up yesterday through close, right? QQQ was up about 3% yesterday. That was your meltdown, was $12. Or not $12, 91 to 81. Maybe $9 or $10. Today you're creeping back up. This is exactly what's going to happen eventually to the oil stocks. And it doesn't mean that they won't go up more. I understand why people are buying it. But at which point is the peak? And that's the hard thing, right? That's the hardest part of the equation. I think we're closer to the peak, quite frankly, than the downside. I think that these things could go down at some point, and it wouldn't take much more than a war rumor or a headline that says, U.S. increases production to pull it off. So just be careful if you're in oil. If you got in oil in August of last year, December of last year, let's take a look at our one-year chart. Oh, hell, even January. Then you're fine. You got plenty of profits, right? You can keep your finger on the trigger a little bit further. But if you bought in, let's say on March 1st, when did the war start? 222-ish. And you got in at $77 or so, and you're up $7, and the world looks rosy. You got to have your finger on the sell trigger, in my opinion. Here, January, November, you got some room. You don't have to freak out too much. Plus, you're also getting those dividends by then. But if you got in up here right when the Russian invasion started, then look out, man. I'm not saying it's going down tomorrow. Do you understand what I'm talking about? I'm talking about that you're a headline away, like yesterday, and this whole thing doesn't go to zero, but your profits disappear. And we've all been in that situation. Oh, let's see. Lion, what's your PayPal, DraftKings, Palantir? So I'm going to do, you're spoiling my video for tonight, which is a ugly portfolio update, but I'll give you the numbers. PayPal right now, I'm at I want to say 168. 168. DraftKings is still about 30. I didn't really add much to them, but I have 230 shares. So I'm looking to make a last chunk of 70, buy another chunk of 70 in DraftKings. But when, I don't know. It was at like $17, which I'd gladly buy. I just don't know if that is the end, right? Let's see where we're at today. 1707, your year to date on DK, 1729. So we are at a new low for year to date, so I'm waiting, does it go to 15? Does it go to 12? Does it go to whatever? I don't know, but that's when I feel like we're closer to that point, then I will buy my last 70 shares of DraftKings, finish my investment at 300 shares, and then ride. Then you asked about Palantir. I think Palantir, I don't know off the top of my head, roughly $19 or $20. So I know that the max it is around 20. So anyway, and I'm still good on them. I may add another 100 shares to them if they keep going down to single digits for the long term. We'll see. Mostly what I've been doing is Qs. You'll get the whole synopsis in probably tonight. I'll probably record that this afternoon. Brutal portfolio update. Tears, people screaming, people dying. That's the kind of portfolio update it is. But look at me. I'm not even stressed about it because I think that this is so negative right now. And just like Lion, I don't want to speak for him, but Facebook investor, has some PayPal, has some other stuff. Look, it sucks right now, and everybody's laughing, right? The Twitter birds are chirping, and you just got to hang tight. There's nothing there. Whether or not you buy, I think, is a personal choice. I get that. But please, God, don't sell, not unless you're just in penny stocks. And I know I just said maybe sell your oil stock. I'm saying keep your finger on the trigger of oil, because when it turns, so let's take Facebook and Exxon. If I own those two stocks right now, this is the point I'm getting at. Oil's up, Facebook's down. Eventually, this is going to happen, right? It's an eventuality into the future that oil will come down, Facebook will go up. Maybe not everybody agrees on Facebook, but that's my thought process. So what I'm saying is you will have a short time span, in my opinion, to get maximum profits out of your oil trade, and do it and stick with it. Today seems like a great day to be in, and tomorrow might even be better. But there's going to come a time when it switches, and everybody who's with Lion and I buying Facebook and PayPal here at the shit bottom, our day's coming, but we don't know when it is. Might be 60, 90, 120 days away. I'm not worried about it. I'm really not. It's disappointing, and it's paper losses, but paper losses aren't real losses, right? And I sold a couple winners to keep buying. I sold winners to buy losers, put it that way. You'll see that tonight. All right. Big Apple event. Some dude thinks Apple goes to 250, 32 PE. So I did see the Apple event. I don't use Apple products. My family does. I'm not anti-Apple. I use a lot of Google, so I'm on Android. And when you're on Android, you just don't need much of anything else that Apple does. I do like the Apple TV. Some of their shows are really cool. I mean, granted, they've got like 5 shows total that I would watch, but I log into there. I was trying to see if we could get a bullet point on the event. New iPhone, Friday Night Baseball. Here we go. This is what's great about Seeking Alpha, by the way. My affiliate links in the description, is they usually break this stuff up. Let's see. Wedbush Securities, Dan Ives noted the new iPhone SE comes with a price tag $30 higher and global supply chain, blah, blah, blah. Let's get some more. This is big, the new M chip, M1 Ultra. I think just the fact, Google or Apple's been making their own chips for a while, but you've got what they're doing in the chip world is crazy. It really is, and it was such a smart move. I wouldn't have figured they could have pulled it off to be a legit, excuse me, to be a legit chip producer. Granted, TSM's doing them all. Let's see, Mac Studio. So there's nothing really here for me. I mean, the chip thing is bigger for me than anything else because it just solidifies the strength in their systems, right? So each phone that they produce will keep up with what Samsung's doing, for example. But, is there something here that goes to 250? Geez, I don't really see it. But let's take a look at, let's see, earnings estimates, revisions is what I'm looking for. Ugh. All right. Fiscal year revisions for the last 3 months. 38 people have EPS going up. 37 have revenue going up. Fiscal period ending September 2022. It's more of a 6 to 3 month trend, not here right in the most recent few days. Now, revenue wise, about the same. But you know what? There was a time on Apple's EPS here at $6.15, current estimate, year-over-year growth of 10%, and potentially on revenue, there was a time that this was flat to negative. That's how much Apple has improved the story probably since December. I saw EPS up maybe 1 or 2% and revenue flat to down 1%. So things have really changed in the Apple game, and that just goes to show you how things can change for some of these other stocks. Now, Apple is in a class of its own. I get it. But some of these stocks, it's not going to take a whole ton for them to have good news, right? It's just you're getting bogged down with negatives, and eventually you catch a positive and things go up. And I'd rather be on the companies that you believe in that are bogged down on negatives than the vice versa, because the companies that are sailing high on positives, they're a step away from crashing. And I want to be on the other side, which is, everyone hates it, aka Facebook, PayPal, and, nothing good can happen. Those companies are done. They're going out of business, right? All the rumors. And as soon as they do one good thing, is what's going to happen. So, that's where I stand anyway. Lion Baba is killing me. Yeah, I don't know what to do. I don't own Baba, but I don't know what to say anymore. I mean, it cannot catch a bid, as they say. Paul Watson, greetings from Europe. Gas is, holy cow, $8.65 per gallon. That's great, Paul. He's over in the Netherlands. That is, so we have a family SUV, Tahoe, basically an environment killer. And I think that thing has a 24 or 25 gallon tank. And at Paul's numbers, jeez, I'm just going to do it for fun. Let's say 25 gallons times 865, $216 for the Tahoe to roam the Netherlands. Not a good thing. PT's here, Amazon, fantastic investment. You're always posting this, PT, we know. We know. Google is awesome, yes, we know. Apple is safe. All good stuff, I'm not disagreeing. Now, you did throw in Zoom and Etsy, great deal today. And I agree. Now, Etsy could very well get back into my radar because it is starting to get to that point of stupidity. It's just really hard because of, and I've said this before on the channel, it's just so hard because e-com is not being evaluated very highly right now. When you look at plenty of the others, take Amazon, right? And how much their valuation multiple has shrank considerably. Etsy's has shrank considerably. And then you go look at eBay, and eBay doesn't grow, so it's not a fair comparison. But eBay's in that like forward P of 10 or something crazy. So that's what makes me worry a little bit about Etsy over the short term. Forward P of 34 right now. But if it keeps tanking, there's going to be a buy point for these stocks, right? And Shopify is probably in the same category. I don't know how bad if they're going to get under 500. 548 today. They had a good day yesterday with, that's 591 yesterday when people thought the war was ending and oil prices were going down, right? So these things will get there. But this is a killer on Shopify, forward P of 166 in this current environment. It wouldn't surprise me to see this one dip under 500, and then you just have to, place your bets from there. Let's see. No company has cash flow like Apple, absolutely. If they issue share buybacks during high, and they do. They buy back constantly. And I've shown, let me see if I can find it. I think it's on macro trends. CNBC. Maybe it is Y charts. All right, well, let's look at Y charts. I don't know if this will show up because I'm not a member. And let's go to 5 years. So there's your 5 years of spend on buybacks. They took a break in December of 18. And then through last year, I mean, these quarters, 20 billion, 20 billion, 22, right? And it's somewhat funny because Apple just said they had a long-term $10 billion buyback, and Apple's blowing 20 per quarter. But they're on the heavy side. And I know what I'm going to look for right now. I like this, there's this macro trend. Here it is, macro trends website. This is a better way to do it, in my opinion, not so much the money on buybacks. I like to look, they do a good job with shares outstanding, 210 through 221. This is free, I'm guessing it's free. I always come here for free. There's their 5-year shares outstanding, and we'll do it with Apple too. But you see how that just crushes, you know? And this red looks negative, but it's negative in a positive way. So they took out from September to December, they took out, did they? No, there was actually a bump here. But you can see just how far it's fallen. I guess I don't want to say too much about this percentage column in the bottom. I would just stare at this. Now let's look for Apple and look at it through a different lens. There you go. 5 years. Woo! 3%, right? We saw Google was in less than 2%. And look at that, 21 billion shares 5 years ago. Now you've got 16.5 billion. It's crazy. Let's see. Amazon, I want to say Amazon hasn't done anything, and sure enough, they're way new to the, let's just make sure that this is correct. Yeah, shares outstanding. Yeah, they're very new to the share buyback game. They've been issuing shares forever. And so this will be their, I mean, seems like first time in a long time since they bought anything back. They might have bought something back here in 2012, but holy cow, polar opposite, right? And what do we know about Google and what do we know about Apple? They've been crushing it. Another stock that is supposed to do more in the buyback land is PayPal. I'm rooting for that, to be honest with you. Here's their 5-year. So they do all right, right? It's not as good as Apple. And the thing is, though, they kind of fiddled around with it during COVID with the stock-based compensation. You can see where they gave out a little bit. They need to get back on track here because this is pretty flat from 2018. So let's just say through 2019, June of 2019, they were doing good, lowering that, and they kind of fooled around and brought it back up. They need to get back on track with what they're doing because, frankly, as the shareholder, it's time to start delivering some value, and the pressure's on them. I don't give a shit what I think, but the pressure's on them to start doing that because they need to save a stock that is not loved right now. All right, who else we got? LD, back in the mix. Good to see you. Good morning, Vicky. Netflix is, I'm all about Netflix. Netflix is like, they're not similar to DraftKings in any way, but I can't figure out where the bottom's going to be, right? So I'd love to get some Netflix. This one could be a stock, not buyback. This could be a stock split candidate. I could see how Netflix would benefit from maybe 10's a little high. Maybe if they did a 5-for-1, got in the 60s, I think that that would help on their options side a little bit. I don't know if they'd ever do it, but yeah. It's just hard to tell what the bottom is for Netflix right now because it has fallen out of favor, just like PayPal and Facebook. So 358, you're 597 at the start of the year. It's going to take a while for people to forget that trauma, but I would be in. I think the company, I think the entertainment that they're providing is good. Everybody has a different opinion. All I know is wherever I go, I never meet somebody who doesn't have Netflix, right? So, and I'm a little bit older, you know, I talk to people who have kids and houses and whatever. I don't know anyone who doesn't have Netflix. I really don't. Now, I know a lot of people may not watch their subscription, but they'll pay for it, particularly with kids. It's just one of those, like, you just do it. Coca-Cola, Pepsi kind of thing for streaming. My thoughts on PayPal Montero is I'm holding, and I would love to say buy under 100, but I would say if you're not in, keep waiting. I'm buying some shares under 100, but geez, I'm not going to lie and tell everybody that this is the bottom. We haven't seen it yet. So, you know, if you're interested, I think it's a good company. I think it'll grow double-digit top and bottom line for the foreseeable future. But, you know, if you're on the sidelines, why not? Why not wake up every day and see where it lands? We know one thing, it's not going to go to $150 tomorrow, that's for sure. So you have to start looking ahead to 2023 with PayPal because so first of all, this 465, this is less than PayPal themselves have guided for. They guided for 485, I believe. So this is underrepresented, but you got the 4P of 21. The bad news is here it's not moving, right? 1% year over year. I think that the landscape here changes, but let's just take it for what it is. Consensus revenue. Double digits, blah, 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 blah. And if they outperform, which nobody's even considering at this point, you know, gosh, what if you got to plus 20%? And that's a story. Now, you have to believe in the story. I believe in the story. I believe that the Venmo integration, which is supposed to go live on Amazon here soon, I personally haven't seen it, but so the bears for PayPal will say nobody uses PayPal at checkout anymore. And that might be true for a younger generation. You know, I still use it, particularly on the business side. And the reason that I do is because it connects to my bank account without being my bank account. There's a lot of like reasons that I don't mind using it, and for subscriptions as well, because with subscriptions, let's just say to a server or an email provider. If I'm running that in the business and I decide that I want to not do that anymore, I don't have to call anyone. I go in my PayPal account, I press cancel subscription, poof, it's gone. Okay, but I'm not everybody, I get that. Now, Venmo. Imagine a world where wherever you see PayPal, aka the top 1,000 websites in the world, then it starts to say Venmo. And so all those stupid things, when you were at the birthday party or you picked up coffee or you got pizza and everybody sent you $5, $10, $15 with Venmo, and all of a sudden, you know, your Venmo balance is like $150, you start using it as a wallet, then you're on this website called Amazon and you need to buy a garden hose. Wow, I don't know where that came from, but I picked it. The garden hose is $30. You got your Venmo. You don't want to use your credit card because you're like, I just don't know. So you have cash and Venmo that you got from everyone else. You just pay that way, right? I get it. You can use your credit card. But how about another way? How about something you don't go to every so often, a shoe retailer, e-commerce for shoes, right? I don't know who that would be. But let's just say you're buying dress shoes for work. And again, this is something you're doing on your phone at work, and you don't want to get out your credit card, right? And you don't want to type in whatever. You don't have it saved to the wallet, and it says shoes cost $60. You have $60 in your Venmo account. It's right there. Screw it. I'm just going to use that. The pizza money the guys gave me back. I'm just going to use that. Boom. Bought your shoes. So that for me is the bull case. I know that wasn't super scientific, but the erroneous assessment that PayPal will not grow in the future is false. Okay? And I understand it is dark and dreary right now. I got nothing for you on the right nows. I just know that the future has potential. All right. Let's see. Missed a couple things here. LD, I've got an oddball stock everyone knows, but no one talks about. BBPA. Oh, is it? I don't know that one. Or BICE OTC. BB.PA. Okay, let me try. BICE. That one I don't know. Let's see who this is. This must be somebody who's like a powerful company that I've never heard of. Protecting goods and achievements. I need more. I don't know. I don't know what this company does, unfortunately. Anyway, if you guys know, then that's the shout out. It is South America. Summary, let me go down here. Insurance, pension plans, premium bonds, dental insurance in Brazil, 2 segments, security and brokerage. Okay, so I do like the potential. I don't know why I just didn't read this first. I do like the potential for Brazil, and I realized I didn't switch that over. Here's the stock that was thrown out there by LD. Sorry, guys, I missed it. I forgot to switch the screen over. And here's what they do. I'll leave this on the screen so you can read it. I like the potential in Brazil. There's a company, PAG Segurio, PAGS is the ticker, that I've almost bought a couple times. It's fintech kind of play for Brazil. I'm a little goofy though, because since I don't live in the country, I'm really weird if I can't see or feel what it is I'm investing in, or choose to do that, then I get kind of antsy. And then obviously the Brazilian economy is a pile, a steaming pile. So you have to be careful. But I will say that South America in general is intriguing. And I think that what you saw with Mercado Libre, and you also have Amazon, you have C Limited, I think also moving some stuff into South America. I like the fintech / e-commerce upside for those regions. I just haven't invested there yet. I really would like to buy Mercado Libre, I'll be honest with you, but I just haven't yet. All right, Vicky says PayPal depends on Visa, MasterCard. Visa, MasterCard much safer. I also own Visa. By the way, there was a stretch with Visa that they went under 190. I didn't catch it. Today you're at 198. I decided to buy Qs because I'm building that up. But you could have got, anything under 200 for Visa if you're a long-term investor, I think is fair. But here's what's going to happen if you don't know. 2 things keep Visa in check constantly. The one is travel, right? And the second is the war. And just the fact that it changes consumer outlook. So travel / oil prices, this is the new headwind for Visa, is oil prices and how they relate to travel and what will happen. So, you know, obviously if you're going to fly, you can anticipate that prices will increase over time if oil prices do not come down. As soon as oil prices come down, Visa will go back up. If the war gets at least to actual diplomacy stage, then that will help as well. Cross-border transactions are at risk anytime that there's bombs, you know, falling on your head over in Europe. Derek's here. How about BABA trading at lower than the IPO? Holy cow. I did not see that. I haven't looked in a while. Everybody has their pain points. Mine is obviously PayPal. But certainly, okay. So Derek says IPO. Best Seeking Alpha has is September of 2014. 90.57, so it's right there, and he could have caught it on a day that it went below that. And this isn't exactly the most scientific approach to the IPO price. But yeah, good call. And look at this. And that's after downgrades on the forward PE. I saw some downgrades coming in the other day after earnings. Let's see where they stand. Yeah, so negative this year, but then picking back up next year. Revenue-wise, though, I mean, this is PayPal, right, in a different form. From a stock fundamentals, excuse me, the companies are not alike whatsoever. PayPal has flat to negative EPS growth for 2022, albeit Alibaba, to be fair, their fiscal period ends, they'll be out of that hole in May or so when they report. And then they're going up, you know, roughly double digits. And the sales are fine. Price to sales of 2. But keep this in mind, when I was talking about e-com and Etsy, price to sales of 2, e-com can't catch a break anywhere. So while I agree Etsy is on sale, just go, don't even take my word for it, go look at e-com valuation multiples. They're low, and it's kind of like weird. Like, do we think that there's, you know, I get it on the retail stores, but do we suddenly think that, you know, retail stores are going to outpace the growth for e-com? I know many retail stores. I own TJX, right? TJ Maxx, Home Goods, etc. Of course, they're going to do better this year than last with less COVID influx. But the bottom line is, you know, I can't imagine Amazon, Etsy, Alibaba, you name it, continuing to grow over time. And if you're bullish on retail store footprints, then why wouldn't you just buy Target or Walmart, somebody who's playing on both sides of the game? You know, at least those companies, and arguably maybe Macy's, I don't know what department stores have left, but Target, for an example, not only has a great store footprint, but let's say the world of the superstore goes away. Don't know if that'll ever happen. You know, they're plenty fine on the e-com side. They're growing plenty fine. All right. Oh, LD's coming in to help me finally. Didn't mean that one. I meant BIC, the lighter. Oh, yes, BIC. I do know. I'm old school, so we used to have regular lighters. That's not it. Let me bring it over. I was laughing with somebody the other day who smokes, and it's hard. Like, you can't take lighters in airports or half the places in the world. I was just laughing at him about the good old days. Well, I can't find it. Anyway, I don't know where it is. It might be that BICEY that you're talking about. If I can get my mouse to BICEY. This is probably it. Let's see if they have a picture of yep, this is it. I don't know what what they're doing here. But anyway, so I just wanted to bring this up, and you got a P of 628. It is OTC. Probably doesn't have a lot of, no estimates. But yeah, I mean, read through there. This is the kind of stock where it is interesting to take a look from a Seeking Alpha point of view, because you get all that information in here, and then you get, although it's been a while on this, that's 2021, you get other people who do some sort of free research for you. Anyway, good call. Sorry I screwed that one up, LD. I figured you meant something else. But I stand by my Brazilian take, South America take. All right. Vicky is down on PayPal. Too much competition. No hope at all. That's exactly why I'm buying. So buy the bottom, buy low, sell high. Well, hopefully it won't be buy low, sell lower. Derek, I was lying to Derek, preaching Bob at 170. Nothing has changed 5 years from now, and I think that's a wonderful conviction note, right? Not necessarily for Baba, but anything you own. So, maybe that's my conviction on PayPal. Maybe that's, we talked about Facebook, Amazon even, who has been beaten and bruised. Derek, it'll be hard to weather, but my God, how can you not risk 1,500 at this level? Totally. Derek says, sold Amazon today on the news, sold some gains on a big green day, buying more. Yep. So yesterday was a great day. And I sold Amazon as well. I'll cover that in my video for tonight. Baba will touch 80. Vicky's here with the negatives. Holy mackerel. Baba will touch 80 USD as per technicals. I own 300 of them, but not worried. Okay. Jeff always has a fresh haircut. 3 weeks. Every 3 weeks-ish. I mean, not like it's like booked that it's every Wednesday at 9 a.m., but the place is right down from me. And, dude, when you get into the 40 stretch, you got to cut the grays off, man. That's how bad it gets these days. Sniff is all in on crypto. I'm not doing that, but I will say that I am sort of excited myself just for Bitcoin right now. But I'm going super small every week, 100 here, 200 here. But I do like it, Sniff. Lion, I'm waiting for Jeff to grow the Alex Carp. Let's take a look. Do I do the full Palantir? Let's get some good images here. I mean, this one, does this look like me? This one's the best. I hope it's a windy day. Sorry, you can't, let me drag it down. I know you can't see. Oh yeah. I hope it's a windy day and that's what's going on. Oh, here's a good one. My face is in the way. But you get it. It's right here. Crazy. By the way, that would probably take me a decade to even grow my hair that long. QQM. I gotta look it up. Is that the one that's 2x instead of 3x? If it is... no, this one's NASDAQ. I need some more information. This might just be the small one that has less fees. That's the word I was looking for. Fund characteristics, fund details, management fee, total expense of 0.15. I think that's what this is. Portfolio. Yep, Apple, Microsoft. So there's nothing wrong with that at all. And I've covered that question before. Yeah, you save a couple bucks, maybe, depending on the size you're holding. You save a couple bucks on those holdings, If you look into the options opportunities, so if I ever get to 100 shares of QQQ, it's just more liquid and it has more options interest. But there's nothing wrong with QQQM. I mean, you'd have to trade, for all the reasons I'm buying Q, frankly, I would have to trade at hundreds of thousands of dollars for some of it to really pay off. So I'm happy that M is there. And it's, you know, if you're just starting out today, it probably does make sense to grab the one with the lower interest rates or management fees. Russia's recent stock situation, non-national shareholders. Yeah, Russia's a mess. I mean, there is probably a game, I wouldn't even know how to play it, but imagine that if you just put $500 in, like, wait for their stock market to reopen, you know, give it a couple days, give it a couple months for things to settle, and just buy like $500 of some Russian index fund and just see what happens. I mean, you want to talk about the bottom, dude. Instead of just throwing away, you know, money on something stupid, you buy that, and who knows 20 years from now. But needless to say, the risk is there. Lion misses the days when Papa Powell said inflation is always transitory. Yeah. That stuff is gonna shake out. Just give it some time. I wanted to look while we're talking about that. Getting ready to go get some lunch, guys, but what is FOMC meeting? That should be next week. March 15, 16. Meeting associated with the Summary of Economic Projections. Wonderful. Yep, so 16, 17, we are, look at my little calendar. It's Wednesday, Thursday. Now, wait a second. Oh, 2021. I just saw, so we're in, of course, 2022. It's 15, 16. So as you guys probably know, it's the 16 is the bigger of the 2 days because that's the press conference and answer questions. That will be next Wednesday. I don't think, you know, hopefully we get our 0.25%. Just throw it down. Stop talking about it. It's so annoying. Let's just jump in and let's just get going with it. That's my take. And then the rest we'll hear about, you know, all the other stuff that's going on in the world. But all right, guys, good to see everybody. Hope you're doing well. I am going to do the portfolio update. It might be tonight that I edit it, but it's all bad news, and I'm okay with it. So that's the quick preview for today. Hope you're doing well, and we'll see you soon.